Hello, everybody. Welcome to the webinar. My name's Troy. I'm a senior account manager with AvaTrade. I want to give a special welcome to our Canadian clients who now have access to our live webinars as we're partnered with Freebird Direct in Canada. So welcome to you folks as well. Before we get going, I want to do a quick systems check just to make sure everything's up and running properly. If you would, in the chat box, just go ahead and type OK if you're seeing my screen all right and hearing me clearly. Okay, I've got enough responses. Thank you very much. It looks like all is up and running properly. As we go along, if anyone has any issues, if you lose audio, something like that, just let me know. Usually the issues are on individuals' side, maybe on their own PC, but keep me up to date if anything happens with your connection. As we get going, some things to keep in mind. As always, we cover the risk warning. All investments have risk. I think we're all probably aware of that, no matter what you're investing in, whether it's real estate or something else. Obviously, trading Forex, CFDs, spread betting, and options also have risk. And you can read the full risk disclosure statement on our main website. Another thing to keep in mind as we go forward, what we cover is meant to be from an educational perspective to help you gain more knowledge and hopefully put together a trading plan that works for you based on some information that we cover to either improve upon an existing trading strategy or if you're brand new to things, to start building one with some useful information. Nothing that we cover is meant to be official financial advisement or anything like that, so keep that in mind. Now, as we go along, please, if you have any questions, I'm happy to answer them. And please don't, as this slide might suggest, don't wait until the end to ask questions. You can ask questions at any point and give input as well using the chat box. If you have something you'd like me maybe to share with the audience, I'm happy to do so. And questions a lot of times help expand upon ideas as well. So please, there are no dumb questions. We've got a mix of traders here in terms of experience level, and we typically cover something for everybody in terms of the strategy and the concepts. It's basic enough for the beginners, but at the same time, it's advanced enough to add some ideas to your checklist or to your knowledge level, even if you have experience. Now, as we go through the technical analysis, there's some things to keep in mind. You know, technical analysis, the basic idea of it, what is it? It's looking at the historical movements on the charts. Typically, we use candlestick charts and looking for patterns, looking for something that gives you a clue as to maybe your expectation for the future. And obviously, there are no guarantees that what happened in the past will repeat itself in the future, but certainly it can give you an idea of how things are trending, how things have moved in the past, and maybe give you an idea of what you might anticipate in the future. Now, there are different ways of doing technical analysis. We tend to lean more on manual methods of technical analysis, which means drawing our own lines, support levels, resistance levels, finding where things are ranging, where things are trending, and looking for entry points that might be opportunistic based on some of that technical analysis. Now, other ways of doing technical analysis might be to put indicators on the chart. And these indicators sometimes draw the lines for you. They put things over top of the chart that tells you maybe signals of when something is overbought or oversold. A lot of indicators do work well within a trading strategy to give you ideas about maybe where you might prefer to enter or exit trades. But what they can't take into account is what's happening right now in the fundamental news. And so they're purely technical based. And a lot of times that leaves you a little bit at a disadvantage when it comes to what might be happening with the breaking news or reports that came out recently that can't possibly be programmed into an indicator that was designed and built, you know, months or years ago. So we tend to lean more on the manual methods within the webinars that I do. That's not to say on occasion we won't use an indicator or that they're not helpful, because we do on occasion, and they are helpful. in different ways at times. So with that said, we'll move ahead. We'll jump right into the charts. I don't like to spend a lot of time in slideshows because it's obviously not live moving information. So we'll go ahead. We'll take a look at the demo account first, see what we're doing, what we see happening live on the movements and what's happened recently. We'll take a look at some fundamental news also to maybe explain some of what we're seeing, why it's occurring. And then we'll get back into the technical analysis in terms of potential movements coming up and moves that you could have made even over the past 24 hours. And please, like I said, chime in with any questions that you might have. This is something that we were looking at in a webinar yesterday. And so the lines were already drawn. We can take a look at what we looked at yesterday, and I'll explain the technical analysis of it, and we'll look at a couple other things as well, and then we'll get to some of the fundamental news. Now, what we're seeing here is gold on the 1 hour candles, and we see a major drop off in gold just a few hours back right here. Okay, it plunged down, and there's some reasoning as to why that might be occurring fundamentally, and we'll talk about that in a bit. But technical analysis wise, yesterday during the webinar, we were talking about this being a major support level, and for those who don't know what that means, it's a price point for an asset where the movements might be dropping to that point and then bouncing back up. And so it's a low point in the movements that seems to be holding, and then the market pulls it back up above that price point. And so we can see here, this price level has looked important through the past. We see it was a support here, the price hit and bounced. Then we see a breakthrough here. And a lot of times when you see a breakthrough of either a support or a resistance level, you see what's called a breakthrough candle. Okay, so a breakthrough candle tends to be larger than the other candles, and it stands out on the chart. And so we can see here smaller candles testing the support, and then a breakthrough, and you see the size of these two candles on the breakthrough. Gold dropped from 1492.5 down to, at the end of just 2 hours time, down to about 1482.5. So dropped like $10 in the price of gold in a 2 hour period. And so this, a lot of times, this is what you see on a breakthrough, is when a support level gets broken. It took some kind of big news to cause the support level to get broken. Looking back on it, I can't recall what that was, that many 1 hour candles back, that many days back, but something happened fundamentally causing that support level to be broken, causing enough momentum for the price of gold to drop that much. And so the support level was broken. There's your breakthrough candle. Okay, then the general rule of thumb with support and resistance theory is once a support level is broken, whatever caused it to break that support level then becomes resistance. For the same reason, whatever news caused it to drop below that price, then logically speaking would likely keep it, at least for some period of time, from breaking back above that price. So the support is broken, it becomes resistance, predictably, resistance again, and it drops back down. You had two opportunities here to trade down from the resistance, and then boom, it broke through the second time. Okay, and then it became support again, support, and a bounce. Okay, and then we see it tested it again right at that exact spot. And you start to see this on the chart, and you say, wow, well, this can't be coincidence all the time. Info, if you would check your audio on your side. I don't have any other complaints about the audio. If anyone's having problems, let me know, but everyone gave me the okay starting out. So maybe check your audio setup. Now, so what we see here is, thank you, Marvin, loud and clear, I got you. So we've got support here. And so you start to say, well, maybe that's just a coincidence that the price reversed at that point. Look at the history. Look at it. Support, breakthrough candle, resistance right on cue, right at that old support level, resistance, and right back down. Resistance again at that same spot, hesitation. Then once it breaks through, we didn't get a traditional breakthrough candle there. You don't always, it's not a big candle, but then it became support. Support right on the same price point. And then again, it tests it and look at the same price point, support, and there's our breakthrough candle, which is more of a bouncing movement. It bounced up off of it with a big momentum. Okay. And then again, it came down. And what does it do in order to break that support? A breakthrough candle. Look at the size of that candle. Just a few hours ago, it dropped from 1494 all the way down to 1484. Again, a $10 drop in a short period of time, broke that support at 1488 or so, and continued to drop to 1484 or so. Okay, so classic movements, predictable price points for support or breakthrough candles. Okay, so I'm showing you a lot of traders will trade just off the technical analysis. They don't care what's causing it to break the support. They just know that when it does, that tends to be not just a small break, but a large candle, right? So if you had a sell stop, a pending order, ready to go below this support, let's say at 1487, and I'll draw you a line. If I had a pending order right there, just below the support, saying if it breaks the support, I sell. That would be what kind of pending order, by the way? If I bring up pending order options, let me switch from market execution to pending order. Which of these four types of pending order will sell if it drops to a lower point? For those of you with a little experience. Yeah, sell stop. Good, Marvin. Some others as well. Marvin was the first. Sell stop sells from a lower point. So yesterday, when we were doing the webinar, we talked about this. We said, listen, the movement was up here. Okay, it had formed a small support level here. And we said, listen, you could do a market buy, and we drew the lines right here. You see the lines that we drew yesterday right here. Okay, we said you could do a market buy off this support. If it breaks the support, and it breaks this lower support, you could get out with your stop loss. Okay, you could say I'm wrong. I also alluded to the fact that if you don't like the buy, if you think the market conditions are such that gold could keep dropping, but you want confirmation of a continued downtrend before you sell again, because it had already dropped all this distance right here. And so if you want confirmation of a downtrend before you sell again, then I said, okay, if you don't like the market buy, by all means you could, right? You could expect a potential bounce back up. And it did bounce up some, okay? It went up a few dollars from where it was down here on this support. So it did go up a few dollars, but if you like the fact that there was news yesterday, this is the fundamental aspect of things. Why did gold drop? Why was there downward momentum? There was news that US and China maybe were going to have a deal. They kind of have a phase one, they're calling it, phase one of the trade negotiations lined up and ready to enact maybe next month. That was the news that broke, and the safe havens weakened a lot because of that. And the stock market went up to some new highs. On the NASDAQ, the Dow was approaching new highs, etc. So people were leaving the safe havens, going to the riskier assets because it was perceived good news between US-China trade negotiations. So gold dropped rapidly. And during the webinar, it was in this zone. And we said, listen, if you think that it was an overreaction, you can buy. You can also set up for both, right? We said you could buy. If it breaks this little support, you could get out. And then you could have a pending sell stop right down here. And that's the line we drew, the first support line. If it breaks that support, you could sell, right? And so that's where we drew these two lines right here saying, and so this was the area we were in during the webinar. We said if it broke this support, you could have a sell stop. And boom, the sell stop, if it kicked in at 1487, you could have taken profit at 1484 already. That's $3 drop in gold that you could have had. That's even getting in late after it already dropped some, right? So how much would you make with a $3 or $4 drop in gold? A one lot position is 100 ounces. So let's say you had a one lot position, you'd gain 100, however many ounces are in your position, you gain that much. For every dollar that drops on a sell position, you'd have gained 100 with a one lot position. That's an example. That size position's not right for everybody. You have to trade what's appropriate for your account and for your goals. But that could have been an easy $300, $400 profit just on this breakthrough on a pending order with that type of setup. And as soon as it started consolidating and going sideways, you could get out. Even if you got out now, you're still up $1 per per ounce that's in your position. That's if you waited and got out late. Okay. You also obviously could still have it open, be in a small profit on the floating, and if you think that it'll continue to drop. But you see the technical analysis, how it works. You see that to break support levels and resistance levels, there needs to be enough momentum to break those price levels. We can see it again and again on the chart. Breakthrough candles here, a large bounce candle once the market decided here, a breakthrough candle here. Okay, and we see it up here, by the way. This was a support level. Support, support, breakthrough candle right here. And look at the movement. This, when we had started the webinar yesterday, this had already occurred, but a lot of traders already had sell stops below this support. And when it broke through, they profited on this $10 drop in gold. Okay, so you can see it happens repetitively again and again on the chart. Lots of opportunities. And if you put your stop loss just a short distance, in this case, back above the support here, back above the support here with your stop loss as an example of where you could put it, that's a small risk compared to the potential profit if there's a large breakthrough candle, a large movement. Okay, type okay if you're with me on that concept of price levels, momentum causing breakthrough candles with the support and resistance levels, and pending orders placed in nice locations can pay off well. And because of your selected entry point, your stop loss doesn't have to be far away to get to the other side of the support level or resistance level once it's broken. Okay, the idea of putting your stop loss back to the other side of the broken support is if it's truly a downtrend, it probably shouldn't go back above the support once it's broken. Okay, now not everyone trades with a stop loss. You could have a hedge trade up there. You could leave it open if that's the way you trade. I'm certainly not telling you you have to put a stop loss, but if you were going to put one, many people logically say if it broke the support and I got in on a sell, my stop loss would be back above that support because maybe it shouldn't go back up there if it's a true downtrend. Okay, and we see this is trying to push down again. I see the candle turning more and more red as we're talking. Okay, it dropped maybe 50 cents while we were talking just now. Okay, so what's interesting here, many times when gold is dropping, it's because of good news, which it was, good news between US and China. And a lot of times that causes oil to go up because if there's good economic news, it tends to cause oil to go up. However, what did the reserves of oil show yesterday that caused oil to drop? The oil reserves in the US were reported to be larger than expected. Again, fundamental news coming in to explain the technical movements, right? To understand why the movements are occurring. So what happens if there's an oversupply of oil? What does that do to the price of oil typically? Not always, but typically. Yeah, it makes it drop, right? It's kind of simple supply and demand, basic 101 of supply and demand. If the supply is too large, price tends to drop, right? And the more rare something is, if there's less of it, the price tends to go up. Okay, so not always, but this is the general rule of thumb that we see in the market. So as we saw that there was an oversupply of oil price was dropping while gold was dropping. Orson, thank you very much. No, I don't have a WhatsApp group. I do have clients that I work with one-on-one. If you don't have an account manager, you could request to work with me. But I'm here for you anyways in the webinars. You don't have to have me one-on-one necessarily. Okay, so the breakthrough then here on gold has occurred. Seems to be a downtrend forming still just from the red candle that we're seeing, right? Doesn't mean it has to continue, but you have to make a decision based on something, right? And so, yeah, the fundamental analysis and the technical analysis webinar, everybody, Kevin, it's every week. Okay, we've got some time frames each week for fundamental and technical analysis webinars. And soon we're going to provide a link for everybody to watch them recorded. So if it's at a time that you're at work, but you want to watch it when you get home from work, there'll be a link you can click to watch the recordings. That's coming soon here next month. Hopefully I'll get that set up for the company. All right, good questions. All right, so if we look at oil, then Oil's doing the same as gold right now, dropping. And so let's take a look. We already understand. We could have done that same thing yesterday and today with oil. What I mean is this was a support level here. Support, support. It broke the support here. An easy sell stop pending order strategy, you'd be in the money on oil. Okay? Very simple setup, exactly what we saw in gold. Same strategy, you could be winning on oil already. We had support, support, breakthrough here. We didn't see the traditional breakthrough candle. It wasn't large, but here's your breakthrough. Support was broken and down, 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 down. So a pending order could have been just below this support with oil right there. If it broke the support, you'd have been in at 55.5, and now we're at 55.1. You might think, well, that's only 40 cents drop. That's 40 cents per barrel. If you had a one lot position on oil, which is 1,000 barrels, right? 40 cents drop is a nice little payday. 40 cents on 1,000 barrels would be 400 profit, right? Now, not everybody can trade one full lot. You could be trading 0.1 lots, right? Then that's, instead of 400 profit, that's 40, but it's all relative speaking. If you're scalping the market like this, $40 on a smaller account is a nice return. You don't need to double your account in a week, right? If you can gain 1% a day, how much do you gain in a month? About 20% profit in a month if you gain 1% a day on your account. So if you start looking at it percentage wise, you don't need to expose your account to huge positions. You don't have to go crazy on it. You can if you want, but you don't have to. And sometimes people don't understand. They don't look at it like, hey, I want to, 1% gain doesn't excite me a day. But start to think about, what do traditional investments get you? Maybe nowhere near that. So when you start trading on a platform like this with leverage, if you're going after 50% profit a day, boy, you're really exposing yourself a lot then with large trade sizes. To do that, you want to think if that's the right plan for you. And in my opinion, gaining 1% a day is nice. You obviously can disagree, but I'm not going to frown at a 20% gain in a month. If someone's able to accomplish that, that's tremendous, right? But again, in the end, I'm not here to financially advise you. Please determine how much you want to gain each day and each move on your own. I'm just speaking in a general sense here that even small returns can be nice. So we see that movement here, easy breakthrough on the oil and easy profit. If you made a move with a simple pending sell stop, selling from a lower point when it was yesterday above the support. Now, let me ask you, how would we know whether if we prefer to put a sell stop rather than up here having a buy stop? Or better yet, why did I not maybe buy off of the support line? When this dropped and was sitting here, why would we not buy off the support? We're talking about support levels working well. We see this was support and it bounced up. So when this was coming down, why not buy off the support? What is it that told us maybe we'd rather not buy off the support? We'd rather wait and see if there's a breakthrough and sell on the breakthrough. What kind of analysis maybe tells us that we would have preferred that the wind was blowing down and not up, that we would have preferred to wait to see if there was a breakthrough to sell rather than buying up off the support? What kind of analysis was I alluding to that can go hand in hand with technical analysis, that can give you an idea of which way you prefer to do your technical analysis, which direction you prefer? Starts with an F. Fundamental analysis. Exactly, Mohammed. And several others now are saying the same thing. Good. So fundamental analysis can give you an idea of what direction the wind is blowing, so to speak, and might help you predict more times correctly that you prefer to have a sell stop down here rather than just do a market buy off the support. That way you avoid the small loss that if it breaks the support and you did a market buy, you have a small loss to your stop loss and you take a small loss on that false bounce, right? How would you maybe know to expect that it wouldn't bounce off the support? Very simple. We go to the fundamental news and we see articles like this. This article's from today, but there are also articles from yesterday that were exactly the same or very similar. Okay, oil falls on expectations of rising inventories at key U.S. hub. Yesterday there was an article about Russia not wanting to go along with production cuts. They didn't want to go along with the OPEC production cuts, and that helped push oil down. There was an article this morning about that as well. So so as this fundamental news came out yesterday, we could see a reason fundamentally why oil was dropping and testing the support level. So if you know there's a driving force fundamentally that, hey, there's an oversupply of oil, it's a downtrend, and maybe I don't trust this support level to hold because the wind is blowing down with this news, then it tells me maybe I don't want to trade up off the support. Maybe I prefer to put that pending order, a sell stop below the support level, and if it breaks the support, expect a movement downward because maybe that's confirmation of a continued downtrend. Type OK if you're with me on that. And basically, how long does it take? How long does it take to check these articles before you trade? Not long, 5-10 minutes. Before you trade, go take a look at the fundamental news. Go to Reuters, go to Bloomberg, go to investing.com or whatever websites you trust for breaking news, right? And look at what's happening. See what's happening on the chart. Here's another one. This one's Reuters. What do you think this does? What do you think this does to oil, the price of oil? When you see an article like that, this came out updated 4 hours ago. China's factory activity seen contracting for 6 months on trade pressure. What does an article about China's factory activity contracting, meaning shrinking, what do you think that does for the price of oil? China's like the #2 economy in the world. If their economy is shrinking, what does that do for demand for oil potentially and people's speculative moves on the price of oil? Yeah, listen, a lot of you are saying what I'm already thinking. The price of oil tends to drop if people perceive a major economy like China is shrinking. Okay, so no wonder it's still downtrending, right? So if right before you trade, you look and you see this information and you say, wow, it seems like the wind is blowing down for the price of oil, then boom, it makes sense that when you came yesterday and you saw those types of reports, you'd have put a pending order down here and gotten in on this drop. Okay, so very simple. Now, where's a logical place that you would take profit maybe? Look at this chart. Someone tell me a price and give me a reason. Why might you take a profit at a certain location? If you got in on the sell already, you're in the money, and you're thinking, boy, I don't know when to close the trade. Where's the first logical place that you think the drop might pause? At the next what? Support line. Yeah, exactly. At the next support line, Khalil. So you're saying 54.75, and that's what I see. Okay. Here's the last resistance level. Okay. And mine happened to say 54.74. So we're right on the almost the exact same mark. So here's the resistance. Here's the classic breakthrough candle. How many times have we seen it now? The breakthrough candle is larger than the other candles. And even if you get in after it broke through, you still have huge potential to profit. So if you saw this resistance last week, right, on the 1 hour candles, and you put a buy stop right here, a buy stop order was waiting. It doesn't matter that you missed all this movement on your buy. The point is you waited for confirmation that there was enough momentum to break the resistance. And then you could have gotten in with your buy stop right here. And look how much profit. Once that momentum was created by whatever happened in the market, might have been good news on US China, might have been good production numbers from someplace. It really doesn't matter what it was. Whatever caused it to break the resistance carried it with more momentum with a breakthrough candle. Okay, so this was a huge potential with this broken resistance, but now it's the opposite, right? Now we're approaching it from the other direction, so it should act as support, right? This is the support and resistance theory. It doesn't happen always. Again, trading is never 100%, but it happens enough that we see it on the chart that statistically speaking, you should be aware of these price levels and build that into your plan. Okay, so we see a rapid drop, 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 drop. It's getting near that line. Look at this line. It's very close. So when might you take your profit? Do you wait till it hits the line? Or do you take the profit maybe just before it reaches the resistance? I'm waiting for some input because not everyone's answer is going to be the same. And I'll tell you my answer, which can be completely different than where you would take the profit. Do you wait till it hits the support? Do you wait 75% of the distance? Okay, Kevin, you're saying right before the support. Anyone have a different idea? And waiting for it to hit the support maybe. Okay, some are saying right before, some are saying wait till it hits the support, some say right when it's almost near it. Okay, so first of all, this whole support and resistance thing, it works as an inexact science, right? It's not an exact science. So there's some different options. One option is you could put a trailing stop on it right now. You could put a trailing stop that if it goes back, I don't know, 25 cents, I'm out. Okay? So when you have an open position, let me open one just to show you. Okay, here I'll do a sell. Okay, so I've got an open sell on crude oil. Let's say that I'm in profit. Let's pretend I'm in profit all the way down here from my sell stop entry point. I'm in profit, and I say, well, you know, I don't want to lose the profit if it bounces back up, but I want to let it run, as Marvin just said. I want to let it run. So I could add a trailing stop. Trailing stop, you right click on the open position and you say how many points away, or you can put a custom number of points that you want the stop loss to be. And what happens is if it keeps going the right way, and let's say I put the trailing stop 100 points back, if it keeps going the right way, then the trailing stop moves with it. It's always 100 points back. If it ever reverts back from the low water mark, in this case, back 100 points, then it'll close it and preserve the rest of the profit. So that's an option. Once you obtain the amount of profit that you're happy with, if you want to let it run, put a trailing stop potentially. Okay, that's one option. Another option is to say, if it hits the support, that's my take profit, and you could have the take profit programmed into the trade. Okay, you could have the take profit obviously programmed in at the take profit mark. When you open the trade, you could have put it, or you can add the take profit mark after the fact. Okay, you could have it programmed to take profit right at the support. My preference, the way I tend to do it, is I'm not greedy with the movement. What I mean is the distance from where I entered to where the support level is, I usually try and take about 75% of it, meaning it's not always perfect. It doesn't always reach the support before it reverses. Sometimes it reverses a little early, and I hate to miss the profit. So you'll more likely not lose what is already in profit, right? If you're willing to take it maybe before it reaches that furthest point that you think it might go to, right? So others say, hey, I take it at 50% of the distance to the next support. Others take it at 25% because they're just scalping. So certainly what I'm saying, 75%, I tend to do, doesn't mean that's what you should do, right? You can do it with a trailing stop. You can wait till it hits your perfect mark. You can take it early. You can wait if you're a more patient trader and you think oil's going to drop for the next week. You certainly could even have your take profit below this support level. You could have your take profit down to the next one. Okay, so there are a lot of different ways to handle it depending on your perspective and your preference. But you should at least understand when you get into the trade what your plan is to get out of the trade. Marvin, you're saying you use 3-to-1 reward for risk. Okay, so if your distance to your stop loss at your entry is, I don't know, 50 cents up, then you're saying you'll take profit after $1.50 movement the right way. In that effect, you only need to be right 1 out of 3 to break even, plus or minus the spread or interest, right? So if you're right even 50% of the time, you're profiting with that risk management setup. 50% success rate with that is really good when you're always taking 3 times the take profit compared to your risk. Then 50%, even 40% accuracy profits. And that's up to you individually, everyone as a trader, how you want to set up your stop loss distance and your take profit. But you certainly should take into account the price levels, because we see, as we've seen already in this webinar, that there's something to those price levels. Reversals tend to bounce from those or break through those with big movements more times than not. There's something to it. So it's an inexact science, but there is a science to it. It is meaningful, these price levels. So I see this movement as being close to the support. And if I was in the position already on a sell, I might be thinking about, if it was still open, getting near where I might take profit if I didn't think it was going to break that next support level, right? Type yes if you've ever done a partial close, because this is another option on a movement like this. Type yes if you've done a partial close, or no if you have not. And I like this option in a situation like this, where I think it could keep dropping, but I also want to preserve some of my profit. Okay, so enough of you have said no, you haven't done it. So, okay, let's say I've got this trade running, which I do, and let's pretend I'm in profits and it's near my support. And remember, I said, hey, I prefer maybe 75% of the distance down to take my profit. So let's say it's 75% of the distance. So let's say I want to close only half my trade. I want to preserve half the profit. I'll leave half there so that if it keeps dropping, because I just saw the new article about oversupply of oil again, which we just looked at. It was posted just a few hours ago. So I might say, listen, I think it could keep dropping, but I also see the support level. So I say, okay, I'll close half of it, or I'll close 2/3 of it. I'll leave the rest open to run. So I'll take most of the profit or half the profit, but I'll give myself a chance to profit more. So if that's what you choose to do, I go here, I do modify or delete, I change it to market execution, and look, it's got my order number here. Here's the order number of the one that's open, and I can say, okay, let me, of the quarter lot I have open, let me close 0.12. Let me close about half of it. And so now watch, this 0.25 is going to change to 0.13 because I'm closing 0.12. So I change it to 0.12 and I click close. Boom. Now I've pocketed the profit of that percentage of the trade, almost 50%, 0.12 of the 0.25. I would have pocketed that profit back into my account. I've closed half that position or so, and the rest of the position is open to continue running. Okay, so this is a way where you can compromise. You can say, listen, it might bounce off the support. I'm going to take some of my profit, but I also think it's still maybe going to break the support. So I'll leave part of the position open. Now, even if it retraced and went all the way back, I'm still up even if it hits my stop loss, right? I would only be going into the negative from here, my entry point to my stop loss with 0.13, right? And I already, or 0.12, whatever's left open, and I already took profit on much more for the other half. So in effect, right now, I would be guaranteed a profit on this movement minus interest. On a movement like this, I wouldn't hold it for a month, right? So I would be guaranteed profit if I was closing it sometime in a reasonable length of time, even if this went back and hit my stop loss, because I closed half of the position at a nice distance, and the other half, if it went back to here, it would be even. And if it went to the stop loss, I have a small loss. So, and you give yourself the opportunity to let it run. You could even remove the take profit, right? Put a certain distance trailing stop with the rest, leave the take profit open or put it way down and say, hey, if it takes a huge run, I can make a big profit here and it's risk-free now because I already took more profit than I'm risking on the first half of the position that I closed. So you can start to do this within a strategy to try and maximize potential while also minimizing any risk, because you're already in profit by closing half of it at a nice profit. And so it's not surprising that this looks like it's continuing to drop. How did we know that it might continue to drop? Why were we somewhat certain of it? We just looked at the fundamental news. We looked at it. We could see. And then you look at the technical analysis and you say, well, it's a downtrend also. How do I know it's a downtrend? Look at the 15-minute candles. Look at the 5-minute candles. What keeps happening to the high points? The high points keep getting higher or lower? High point, lower, high point, lower, right? What happens to the low points? What do they keep doing? Lower low point, lower low point, lower low point, lower low point, lower low point. High points are lower, low points are lower. That's a downtrend, folks. That's a downtrend. It doesn't mean it has to continue, but at least it's confirmation of what you might be thinking, that, hey, there's bearish pressure on oil. And what if we looked at it and the 5-minute candles had kicked up here to a higher high point? That's what we would call a reversal, right? Maybe that's enough for you to say, maybe I don't want to keep half my position open on the sell because I see a reversal on the shorter distance time frame candles. I see it's already reversed to an uptrend. So maybe you say, I'll just close the whole thing. But in this case, you look and you say, it's still downtrending on 5-minute, 15-minute candles, still confirming bearish pressure. So then you say, I'll close half of it, leave half open, or whatever the case may be. So you have some justification, not just from the fundamental news that you might leave some of it open to run, but you verify it with the technical analysis as you zoom in on the shorter candles to say, it's still a downtrend also. That's another thing on my checklist maybe before I leave a sell position open that I want to see it's still downtrending. Okay? These are just ideas, right? And when you trade, you should probably have a checklist. Make sure the fundamental news, number one, is in my favor. Checklist step number 2, make sure if I'm doing a downtrend, doing a sell, that there's still a downtrend technical analysis wise. Step number 3, maybe you're looking to say, okay, make sure a support level has been broken or that a resistance level hasn't been broken through, showing uptrend that way. So you start to have a checklist that you say, if A, B, C all exist, then I'm willing to sell. If A, B, C, or if X, Y, Z exists, then I want to buy. And so then you start to be more robotic, you eliminate emotions, and you say, wow, hopefully I'm profiting more now and being less emotional about my trading. I'm not just buying because it dropped and I lost on my buy, and so I buy again. And you start saying, it's got to go up. It keeps dropping, it's got to go up. You keep buying, it doesn't have to go up, does it? I think probably most of us have experienced that, where instead of following a trading system, you're following your emotions. And you're just looking and saying, it can't keep going that way. And you think it's got to reverse or whatever the case may be. Try to keep your emotions out of it like that and trade based on your system, the trade sizes that are right for you, the entry points that fit your trading system, etc. And go through those steps robotically. If it's checking the recent articles on the breaking news, check the latest announcements on the economic announcement schedule. We didn't even look at those today. And by the way, tomorrow there's an interest rate decision on the USD. There's an interest rate decision on the Canadian. There's oil inventories tomorrow, and there's all kinds of factory production numbers tomorrow. So please look at the economic schedule for tomorrow, and I can show you real quick. If anything could change this downtrend in gold and oil, it's a day like you see planned for tomorrow. This is today's announcements that came in today, kind of mixed, green and red. But look at tomorrow. Look what's coming in tomorrow on the economic schedule. We've got the advanced data for the non-farm payroll numbers out of the U.S. You see that's a 3 bullhead announcement. That means high impact expected with that type of announcement. We've got GDP numbers coming in out of the U.S. We've got consumer spending numbers. We've got the Canadian with interest rate decision, bank rate statement. We've got the U.S. crude oil inventories. We've got a second, what they call Cushing crude oil inventories. We've got later in the day the FOMC statement in the U.S., which is going to be followed by a rate decision where the U.S. is maybe expected to lower their interest rate. So lots that will move the markets tomorrow. So if you get into a position today, let's say you're selling on oil, you're in the money, and you say, wow, it's really downtrending still. Maybe I should keep it open. What do you think might happen to this downtrend if there's some news tomorrow that conflicts with it, that says, hey, the numbers look good on the economic numbers tomorrow? What if they come in really good? What might happen to this downtrend? Yeah, it could reverse, right? If good economic numbers come in tomorrow, if the FOMC comes out and says, wow, we really think the economy's turning around, if those factory numbers, GDP numbers come in better than expected, you could see a bounce in oil. You could see it bounce. And so if there's a bunch of announcements tomorrow, let's say you're in the sell on oil and you're way in the money, and and uh, and those announcements are getting close, you might consider closing your position before those announcements come in, because can any of us predict what those announcements will be in terms of, we know when they'll be and what they'll be in terms of topic, but does anyone know for sure what the GDP numbers will be out of the US tomorrow? If you do, please tell, because unless you're Nostradamus and can predict the future, no one knows for sure what the US GDP numbers, for example, will be. No one knows for sure what the interest rate and FOMC statement will be. You might think you know, but if you've got an open position that depends on bearish movement and you've got a bunch of announcements coming up that could be bullish, you have to consider whether you want to leave the position open through those announcements. So, and I'm not telling you should close just because those announcements are coming, but you certainly should be aware that they're there and then make an educated decision. So economic schedule is just as important to pay attention to as the breaking news stories. So there's two types of fundamental news you should be aware of. When are the scheduled announcements coming, so that you know when you might want to get in and out of trades before or after announcements, and then also surf the news articles for breaking news, for news you can't predict when it will occur. Okay, so two types of fundamental news to take into account along with your technical analysis. Okay, and by the way, when we do the fundamental analysis webinar, we also cover both fundamental and technical. Now, we weighed heavier on technical. We started with technical and we spent a lot of time on it, but we got to talk about fundamental when we talk about technical, and vice versa. They go hand in hand. Any questions? I want to take a minute here and give people time to think, digest. Any questions from anybody? Good question. Investing.com tends to sell. That's the wrong word. Here I am talking about selling oil potentially, and I had a Freudian slip. The economic calendar on investing.com tends to show more of the announcements than, say, Forex Factory. Forex Factory tends to focus on the more popular ones, which you can miss some of what's happening. So I like investing.com. There are others out there, but I know investing.com shows a large proportion of the announcements, even the less popular ones, that sometimes move the market. So I like to know all the announcements that are coming. So investing.com is nice, but it's not the only one to use. And by the way, we don't have any connection with any of these economic calendar companies, so I'm not steering you in that direction for any monetary reason. And those calendars are free to use. Then in terms of other things, it's earnings season, by the way, right now. If I refresh this page, not only can you look at economic announcements, but you see up here earnings calendar. Here's the economic calendar, here's the earnings calendar. Quarterly, major companies report their earnings numbers. And you know, what happens if Apple reports better than expected numbers, or if Microsoft reports worse than expected numbers? What happens to the market? It's affected when major companies report their earnings numbers. So you can keep track of the date and time, and it's on our website, by the way. The earnings for everything on our platform, we've got the earnings dates, the date of when they report their earnings. We have it listed on our site as well. So you can take a look at what were their more recent earnings numbers, when is their next earnings report coming? Is it soon? And a lot of times those reports can move gold. They can move oil. They can move the indices. They can move not just the stock that's being reported, but in terms of the earnings report, but they can move the greater market as well when it's major companies. Okay, so that's something to keep in mind too, is to know when are major companies reporting their earnings, because that can affect your position as much as this type of headline. Okay, good questions. Okay, if nobody has any other questions, I think this is a good place to stop, simply because I think it's better to be a master of a few assets rather than try to be a jack of all trades. Because we know the second half of that phrase, jack of all trades, master of none. So if you try and focus on too many assets at once, sometimes it's too much information to know everything about all those assets. So we focused on oil and gold quite a bit today, and so that might be enough to digest. Maybe you could look at yen pairings, because as gold goes, a lot of times so does yen, because yen is considered a safe haven currency, as gold is considered a safe haven as well. So as gold weakens, a lot of times you'll see the yen weaken, or vice versa. It's not 100% correlation, but there is a lot of correlation between those. Yeah, there is a webinar tomorrow. There certainly is a webinar tomorrow. And by the way, everybody, the registration links that you keep receiving by email, those registration links, if you save them, I add new dates and times to those links all the time. And there's two main ones: fundamental analysis webinar, technical analysis webinar. If you have those links, you can keep using those to get registered. And when you go to that page, if you click the drop down window, you'll see sometimes there's more dates available at once that you can register for in advance. I'm going to go ahead and close this sell position. We see the downtrend continued. I'm in profit. Let's close it. As it approaches the support, maybe I close it there in the demo. So yeah, we'll have another webinar tomorrow. Those of you joining us from Canada, we have not yet gotten approved the cryptocurrency assets for the Friedberg partnership. So there's no cryptocurrency on your platform. So we haven't sent the invites and the link for the cryptocurrency webinar, because it's just not applicable for you. If we get that asset approved for Canada, then that webinar link will be shared with you as well. Okay. All right. Thank you, everybody, for joining. Thank you for the participation and the questions and the comments. Someone's asking, do I think NASDAQ 100 is too volatile? Listen, that's up to your personal taste. Volatility helps bring profits too, right? If you cover your risk in a way that you see appropriate, with a stop loss, with a hedge trade, only expose the amount you want, then volatility can work in your favor. So there's no one right answer to that question. Certainly there has been some volatility in those assets, in the indices, but I've seen a lot of people take advantage of that as well. So that's your call though, Marvin. All right, thank you everybody for attending. It's been a pleasure. Till next time, good luck with your trading. Bye for now.